Welcome to the deep dive. We're here to unpack complex topics, get you really informed, without all the usual noise. Today, we are diving deep into Ethereum. It's often called the backbone of decentralized finance. And right now, it's right in the middle of a whirlwind of price predictions. We've sifted through a ton of articles, research, our own notes. Basically, our mission is to boil all that down to what you really need to know.
That's exactly right. And for this deep dive, we're looking at the whole picture for Ethereum's price. Not just August, but looking out to the end of 2025 as well. We'll cover the spectrum. From the super bullish forecast to the, let's say, more cautious takes. And crucially, we want to get into the why. What market dynamics, what reasons are behind these predictions. Understanding that range is, I think, key to really grasping where Ethereum sits. Some are calling it a hybrid beast, part fundamentals, part speculation.
Yeah, exactly. It's your shortcut to getting genuinely well-informed. We'll hit you with some surprising facts, just enough context. Okay, let's unpack this. So first things first. Where is Ethereum right now, mid-August 2025? What's the immediate picture look like?
Well, it's been trading in a pretty tight and, frankly, impressive range. Generally, we're seeing it hover between, say, $4,400 and $4,700.
And that's really close to its all-time high, isn't it?
It is remarkably close. The record high was around $4,861 to $4,891, depending on the exchange you look at. So, yeah, we're talking maybe $200 shy of that peak. It feels like it's right there, potentially ready to break through.
Wow. Okay, so what's pushing it up so close to that record?
What's really fascinating, I think, is the institutional momentum. It's just undeniable. We saw something pretty staggering on August 11th, just recently. A single-day record inflow of $1.02 billion into spot ETFs from institutional money.
$1 billion in one day.
1 billion, yes. And it's not an isolated event. In just the first 14 trading days of August, these Ethereum ETFs have attracted, get this, $3 billion in inflows.
$3 billion. That pace sounds intense.
It really is. To give you some perspective, that pace is nearly double what we saw with Bitcoin ETFs during their peak inflow periods. And we're seeing consistency too. 9 of the U.S.-traded Ethereum spot ETFs, they've had net positive returns on 6 out of their first 8 trading sessions this month.
So this isn't just hype, it's serious capital moving in.
Absolutely. Big players, large institutions now control something like 8% of Ethereum's total circulating supply.
Right.
That's substantial. And you even have specific examples like Bitmine Technologies announcing plans to raise $20 billion just to buy ETH. They're targeting 5% of the total supply.
$20 billion, just one company.
Just one company. It really underscores how deep this institutional interest runs now. It feels like a real shift in how traditional finance is viewing Ethereum.
Okay, that's a powerful bullish story with the institutional money. But, crypto is never that simple. It's still volatile, right? We haven't just seen straight up movement.
No, absolutely not. It's still very much a hybrid beast, as we said. Despite all this bullishness, volatility is definitely part of the game. We did see a recent correction. The price dipped below $4,600 for a bit, and that seemed to follow a hotter-than-expected producer price index, the PPI print.
Right, so the wider economy still plays a big role. You can't ignore inflation signals and things like that.
Exactly. It's a reminder that macro factors are always in the background. But connecting this back to Ethereum's performance in Q3 overall, it's actually been quite impressive. Year-to-date, ETH is up around 41%. That's actually outpacing Bitcoin's 30% gain for the year.
Really? Ahead of Bitcoin, especially after its rough start to the year.
Yeah, particularly notable given that ETH had a really challenging Q1, dropped about 45% in value then. So it's quite the comeback story already in 2025. Shows resilience. And here's where it gets really interesting.
Okay, so building on that momentum, what are the actual predictions looking like for the rest of August, maybe into September? Are we talking new all-time highs very soon?
Wow. Well, the short-term outlook, based on several sources, is definitely leaning bullish. Quite strongly, actually. Prediction markets like Polymarket and Kalshi, they're showing significant confidence. Now, these platforms, they let users bet on future event outcomes.
Like crypto prices hitting certain levels?
Exactly. So Polymarket users, they're giving it about a 65% chance ETH hits $5,000. And an even higher 87% chance it reaches a new all-time high before the end of August.
87% chance of a new high this month. That's very confident.
It is. And analysts are echoing that sentiment. One suggests that if buyers can really push through that $4,800 resistance level and do it with strong trading volume, then Ethereum could potentially target a range of $5,500 to $6,000 pretty quickly, maybe even by August 31st.
Wow. Okay. And any other specific short-term price points?
Yeah, looking just a bit further, CoinCodex has a forecast. They're projecting about a 10.85% rise in ETH's value by mid-September. That could put the price around $5,240 by, say, September 11th or 12th. They even see a possible near-term peak, maybe as high as $5,417.
Those are some very specific, very optimistic targets. Is this just based on sentiment, or are there technical chart indicators supporting this kind of move?
No, it's not just sentiment. From a technical analysis perspective, the charts do look pretty strong. Ethereum is trading above all its key daily exponential moving averages, the 20, 50, 100, and 200-day EMAs. Now, for anyone less familiar, think of these EMAs as dynamic trend lines. Trading above all of them is generally a very bullish signal. It suggests strength across multiple time frames.
Okay, so the trend is clearly up based on those averages. What else?
Then you have the Relative Strength Index, the RSI. It's sitting around 73 right now. The RSI basically measures the speed and magnitude of price changes. A level around 73 indicates strong buying momentum. Importantly, it's not yet in what's typically considered overbought territory, which often signals a pullback is due, so there could still be room to run higher.
So strong momentum, but maybe not exhausted yet.
Precisely. As one source described it, the momentum is ridiculously strong, and for now, sellers are for now non-existent.
Yeah.
It really signals a rush of buying interest. The technicals seem to align with the bullish predictions.
Okay, so we've got the institutional floodgates opening, prediction markets buzzing, technical charts looking strong. It paints a very positive picture. But let's dig deeper. Beyond the charts and the ETF flows, what are the fundamental engines really driving this? What are the core reasons why Ethereum might be poised for this kind of ascent? You called it a hybrid beast. What's fueling the fundamental side of that beast?
Yeah, absolutely. And it's fascinating because it's not just one thing. It's a convergence of several powerful catalysts. It feels like a perfect storm brewing, in a good way for ETH bulls. First, and maybe most importantly, is institutional adoption and that regulatory clarity we touched on. That August 2025 SEC ruling, explicitly stating Ethereum is not a security. That was huge.
Right, that removed a massive obstacle.
It really did. It basically legitimized ETH as a financial asset, more like a commodity. And that cleared the path significantly for regulated products like these spot ETFs and even potentially staking-enabled ETFs down the line. And this isn't just a U.S. thing. You've got global regulatory alignment happening too, mirrored by the EU's MiCA rules and the UK's FCA.
MiCA and the FCA, those are the big European UK regulators, right?
Exactly. MiCA is the Markets in Crypto Assets regulation in the EU, and the FCA is the Financial Conduct Authority in the UK. When they align with the SEC's stance, it gives large global financial institutions much more legal certainty. They can operate across borders with less regulatory friction, which unlocks potentially massive amounts of capital that were previously sitting on the sidelines due to uncertainty. Plus, the SEC also clarified that basic protocol staking, including liquid staking derivatives, isn't seen as a securities activity. That's massive for institutions wanting yield.
Okay, so they can hold ETH and potentially earn yield through staking without fearing regulatory blowback. That seems incredibly important for adoption.
It's a major draw. Then, secondly, you have these transformative network upgrades. Ethereum isn't standing still technologically. The Pectra upgrade happened back in May 2025, and everyone's eagerly anticipating the Fusaka upgrade scheduled for November 2025. These are focused on making the network more scalable, more efficient, and more resilient.
And we're already seeing benefits from past upgrades, right? Like lower fees.
Definitely. Proto-Danksharding, which was part of the Dankun hard fork in March 2024, that's already made a huge difference. Proto-Danksharding sounds technical, but think of it as creating special, cheaper data lanes for Layer 2 networks built on top of Ethereum. It slashed their data costs by something like 70–90%.
Wow, 70–90% cost reduction on layer 2s. That makes using Ethereum apps much more affordable.
Exactly. It makes the ecosystem far more usable. Plus, there was a recent increase in the gas limit to 150 million units per block, which helps ease congestion on the main network itself. And this Pectra upgrade we mentioned, it does something interesting. It allows validators, the entities securing the network, to increase their maximum effective stake from 32 ETH up to 2048 ETH.
Okay, what does that mean in practical terms?
Well, think of it like allowing security guards at a bank to be responsible for much larger vaults. It encourages bigger, more professional, more efficient validator operations. It likely leads to some consolidation, but should ultimately make the network's security layer more robust and capital efficient.
So better tech, lower costs, more efficiency. That's a compelling trio for the network itself. What else?
Third key driver, the DeFi resurgence and staking growth. Decentralized finance on Ethereum is booming again. The total value locked, or TVL, in Ethereum DeFi protocols hit about $47 billion in 2025. TVL is basically the amount of money deposited in these protocols, so it's a key health metric.
$47 billion locked up, that shows real usage.
It does. And platforms like at Aave and Lido are offering pretty attractive staking yields, up to nearly 30% APY. That creates strong demand for ETH just to participate and earn yield. Linked to that, about 30% of all ETH is now staked. That's near record highs. And when ETH is staked, it's effectively taken out of active circulation, reducing the available supply on the market.
Less supply, same or higher demand. Basic economics suggests price goes up.
Precisely. And speaking of supply, fourth, you have deflationary tokenomics. Thanks to EIP 1559, which was implemented back in 2021, EIP 1559 introduced a mechanism where a portion of every transaction fee is burned, meaning permanently removed from circulation. Since 2022, this has removed around 350,000 ETH. It creates this constant low-level deflationary pressure.
350,000 ETH just gone. That's significant.
It adds up over time. Fifth, there's strong enterprise adoption. We're not just talking crypto-native projects anymore. Around 27 Fortune 500 companies are actively building applications or solutions on the Ethereum blockchain. Importantly, those Layer 2 solutions we mentioned are handling about 65% of the total transactions now, and doing it at costs that are 78% lower than the main chain. That shows real-world utility scaling up.
Big companies actually using it. That's a huge validation.
It really is. And finally, sixth, you can't ignore the favorable macroeconomic conditions, or at least the expectations. We've seen some softer U.S. inflation data recently, and there's growing market expectation that the Federal Reserve might cut interest rates, perhaps as early as September. Lower rates generally make investors more willing to take risks, potentially injecting liquidity into markets like crypto.
Okay, wow. When you lay it all out, like that regulatory clarity, major tech upgrades, booming DeFi, less supply, real enterprise use, and a potential macro tailwind, it's easy to see why the narrative is so bullish right now. It really does feel like all the stars are aligning, doesn't it?
It certainly paints a very compelling picture for the bulls. It's rare to see so many positive factors converging simultaneously.
Okay, so the short-term picture looks rosy. The underlying drivers seem strong. But what about looking out towards the end of 2025? You mentioned a wider range of predictions there. It's not all $6,000 or $7,000 by December, is it?
No, definitely not. When you look at year-end 2025 targets, the spectrum really broadens out. Experts have quite different views on how sustainable the current momentum is and how these factors will play out over the next 4 months. On the more conservative or average end of things, you have sources like Cryptopolitan and CoinDCX. Their models project an average price somewhere between, say, $4,125 and $4,688 for the rest of August and through year-end. Potential highs in their scenarios around $5,019. Yahoo Finance also presents an average case around $4,054.
So still potentially near current levels or slightly above, but not necessarily breaking significantly higher in those average views.
Exactly. More consolidation or modest gains. Then you move into the mid-range bullish targets. Finder surveyed a panel of about 50 crypto specialists earlier in the year, and their consensus was for ETH to reach around $5,770 by December 2025. Other optimistic but not extreme forecasts suggest Ethereum could test $7,200 by year-end, especially if that $5,000 psychological level holds strong. Yahoo Finance's bullish scenario pegs it around $6,000. Okay, $5,700 to $7,200, that's a significant jump from here. Now, what about the really ambitious calls? The moonshots.
Right, the highly ambitious targets. Standard Chartered, a major bank, recently upgraded their year-end forecast quite significantly, up to $7,500.
A big bank calling for $7,500 ETH by year-end. That's noteworthy.
It is. And then you have folks like Tom Lee from Fundstrat, who's known for being quite bullish on crypto. He envisions Ethereum not just breaching $7,500, but potentially soaring as high as $15,000 by December 2025.
$15,000. Wow. What's the reasoning behind such a huge target?
His thesis really hinges on that massive institutional and ETF accumulation continuing, perhaps even accelerating. Combine that with potential Fed rate cuts injecting liquidity, and he sees a scenario where capital just rushes into ETH, creating an almost parabolic move upwards.
$15,000, that wide range from maybe $4,000 on the low end to $15,000 on the high end, really underscores the uncertainty, doesn't it? Everyone seems to agree on the direction, generally upwards, but the magnitude is hugely debated. Precisely. It highlights how many variables are still in play and how different analysts weigh those variables.
Okay, so we have this strong bullish case, but we also know markets don't go up forever in a straight line. What's the other side of the coin? What's the bearish case? Or what are the potential risks that could derail this rally or lead to a less rosy outcome for ETH in 2025? Where could this hybrid beast stumble?
That's crucial to consider. While the bulls have strong arguments, there are definitely significant risks and potential headwinds. First, just basic potential price corrections. Even in a bull market, pullbacks are normal. Analysts are warning about possible retracements. If key support levels around, say, $4,400 don't hold, we could see a drop back towards $4,000. A break below $4,000 could open the door to $3,800. And some see a more severe breakdown, maybe below $4,300, potentially leading down towards $3,500 if sentiment really shifts negatively.
So significant downside potential still exists just from a technical perspective if momentum stalls.
Yes. Then there's market sentiment and speculation. While institutions are bullish, some retail investors might still be skeptical after past downturns. Also, some observers worry that the sheer speed and height of some price predictions could actually be a contrarian indicator, maybe signaling we're getting closer to a market top, driven by euphoria. A related concern is leverage in the derivatives market. We mentioned that high open interest in CME futures around $6.04 billion.
Right, the futures contracts, what's the risk there again?
Well, high open interest means a lot of leveraged bets are placed on the price. If Ethereum's price does break below key support levels, it can trigger a cascade of forced selling or liquidations as traders with leveraged long positions get wiped out. This can dramatically accelerate downside moves.
Like a domino effect pushing the price down faster.
Got it. What about regulation? You said it's clearer, but are there still uncertainties? There are nuances. Regulatory uncertainty in the U.S., specifically. While the SEC clarified ETH itself isn't a security and protocol staking isn't a securities activity, their final stance on how staking rewards can be handled within an ETF product is still a bit ambiguous. If they come out with rules that make offering staking yields inside an ETF too complex or costly from a compliance standpoint, it could deter some institutional inflows, or at least slow them down.
Ah, okay. So the asset is clear, but the specific financial products still have some question marks around certain features like staking yields. Makes sense.
Exactly. Then number 4, competitive pressures. Ethereum isn't the only smart contract platform. Faster, cheaper chains like Solana are constantly improving. Solana's Firedancer upgrade, aiming for potentially 100,000 transactions per second later this year. That poses a real competitive threat if they can deliver reliably. There's also risk that if Ethereum's Layer 2 ecosystem becomes too fragmented, meaning too many different L2s that don't work well together, the user experience could become complex. That might erode Ethereum's network effect advantage if users find simpler alternatives elsewhere.
So the competition isn't sleeping, and ease of use matters.
It really does. Fifth, macroeconomic headwinds are always a risk. We mentioned the hope for Fed rate cuts, but what if that doesn't happen? What if inflation stays stubbornly high and the Fed holds rates or even hikes? That could quickly reverse the risk-on sentiment across all markets. Crypto would likely suffer in that environment as investors pull back from riskier assets.
Right, the macro environment could easily turn from a tailwind into a headwind.
Definitely. And sixth, you can never ignore security concerns in crypto. The DeFi space, even with clearer regulation, is still vulnerable. We see exploits, smart contract bugs, cross-chain bridge hacks fairly regularly. Remember the Radiant Capital hack in late 2024? That was $58 million stolen. And while things like restaking are innovative, they also add layers of complexity, which could potentially introduce new, unforeseen security risks.
Security breaches always damage confidence, don't they?
They absolutely do. And finally, maybe a slightly more technical point, but supply dynamics. Remember how we said the Denkin upgrade drastically lowered Layer 2 fees? That was great for users. But a side effect is that fewer fees are being paid on the main Ethereum chain. Since the EIP 559 burn is fueled by those fees, lower fees mean less ETH is being burned. Paradoxically, since the merge, even with EIP 559, Ethereum supply has actually become slightly inflationary again, expanding by about 294,000 ETH.
Wait, so even with the burning mechanism, the supply is growing slightly now because fees are so low?
Correct. The issuance of new ETH to validators is currently outweighing the amount being burned. Now, this might change, but for those focused purely on deflationary tokenomics, that slight net inflation could be seen as a negative.
Okay, that's a comprehensive list of risks. Potential corrections, sentiment shifts, leverage unwinds, regulatory nuances, competition, macro shifts, security holes, and even supply becoming slightly inflationary. It really drives home that point about Ethereum's rally being a hybrid beast. There are powerful fundamental drivers, yes, but also significant speculative elements and very real risks to consider.
Absolutely. It's crucial to see both sides. Now, just briefly looking even further out, beyond 2025, the long-term forecasts generally remain very positive, assuming Ethereum continues to execute on its roadmap and maintain its network effect. Standard Chartered, for instance, projects ETH potentially reaching $25,000 by 2028. CoinCodex has models suggesting maybe $10,000 by early 2028 and way out perhaps $33,000 by 2050.
$25,000 by 2028, $33,000 by 2050. What's the thinking behind those kinds of massive long-term numbers?
It's really based on the idea that Ethereum fulfills its potential to become a foundational settlement layer, or operating system, for a huge range of decentralized applications and even traditional industries integrating blockchain. Think beyond just DeFi supply chains, digital identity, gaming, the metaverse. If Ethereum captures significant value across all those sectors, combined with its potential deflationary aspects kicking back in or staking reducing liquid supply, that's how you arrive at those very high long-term valuations. For you, the listener, if you're tracking this, some key on-chain metrics to watch might be the staking ratio. If that climbs significantly above 30%, it really tightens liquid supply. Keep an eye on Layer 2 activity, consistently high transactions per second, maybe over 100. While mainnet gas fees stay low, that's a sign of healthy scaling. And also, restaking TVL, if that grows substantially, say past $25 billion, it signals maturing infrastructure and deeper utility.
Good practical metrics to watch. So wrapping this up, the overall sentiment seems, let's say, cautiously constructive for Ethereum. It clearly faces powerful tailwinds pushing it forward, but also some significant headwinds it needs to navigate. It sounds like the journey ahead, certainly for the rest of 2025, could involve quite a bit of, as one source put it, narrative whiplash and a wide trading range. That phrase, hybrid beast, feels very appropriate.
I think that sums it up well. You have these incredibly strong bullish catalysts. Institutional adoption is real, the tech is improving, regulatory clarity is a game changer. But you also have undeniable risks. Market volatility is inherent, competition is fierce, macro conditions can shift quickly, and security always needs vigilance.
So the key takeaway for you listening isn't necessarily one specific price target, right?
Exactly. It's about understanding the spectrum of possibilities, knowing the bull case, knowing the bear case, and critically, knowing the reasons behind both. That understanding empowers you to interpret market moves as they happen. It fosters critical thinking, which is essential in a space evolving this quickly. Don't just anchor on one number.
Well said. And to leave you with something to think about as you continue your own deep dive. Considering these dramatic shifts we've discussed, the surge in institutional interest, the changing regulatory landscape, the sheer range in expert predictions, and this hybrid nature of Ethereum driven by both fundamentals and hype, how might your own personal understanding of Ethereum's real value proposition evolve over the coming months? As these competing forces play out, how will you make sense of it all? Keep exploring, keep questioning. Thanks for joining us on the Deep Dive.